Hello, and welcome to the 7th episode of the Pure Michigan Properties Podcast. I am one of your hosts. My name is Dylan, and who's my second host?
I am Shalonda.
Hey, Shalonda.
Dylan.
What's going on? Well, actually, no, I can't say that.
No, you cannot.
You know my saying.
What's your line?
My line is, what is the latest and what is the greatest?
And you know my perspective. As long as we have opportunity, then all good things. Everything is good.
Things. I mean, it all does come down to the opportunity.
That's right.
Right? I think even taking a step back from it, a little sidetrack, but just being open to the opportunities.
Yeah.
Right?
That's right.
Letting the world know you're ready for them.
And the thing is, if you're not ready for the opportunities, then the opportunities that you're looking for just might not find you.
Exactly.
So,
exactly.
Yep.
So, ready to jump into today's topic?
Let's jump into today's topic, Dylan.
Let's do it. So do you want to tell the listeners, the viewers, what we are discussing today?
Well, I love to, and thank you. And so, before we dive into today's episode, and I think that this episode here may just help you change your perspective about everything home buying. You know, I do honestly believe that when you know better, you do better. And so today's episode will help educate you as a consumer in understanding taxes.
We're going to talk about everybody's favorite topic, taxes.
And so many times as home buyers, you know, you're looking for the perfect home that fits family and lifestyle and things like that. And I think that as realtors, I know that for me as a realtor, and I know with Dylan as well, we're in alignment that our job is to paint the whole picture for you, the financial picture, to ensure that as buyers you are most informed again and making those confident decisions.
Correct.
And so when it comes to knowing the financial end of it, I think that the proposal A here in Michigan ties into, you know, that financial plan, those property taxes, and affordability.
I think it all stems from the affordability, right?
Mm-hmm.
So something that I've been doing in my business now when I'm showing homes, especially because a lot of my clientele is first-time home buyers. Mm-hmm. And something we discuss in our consultation is you have a purchase price of a home, so for example $350, right?
Mm-hmm.
But more importantly, I want to figure out what that monthly payment is going to look like.
Right.
And part of that monthly payment, so you're going to have your principal, you're going to have your interest, homeowners insurance, mortgage insurance if you have that as well. But the big factor that I think a lot of people also forget about, and which also kills a lot of deals, is your taxes.
And so to alleviate the stress on whether or not, once you get into this home as a home buyer, if you can really afford it next year and the following years, that is the premise of today's episode.
100%. So our goal is to uncover taxes for you, so at least you have the foundation knowledge that you guys need to know to move forward and feel confident with the decision that you are making when buying your home. So I wanted to start off by saying that I think the MLS does a bad job talking about taxes. You want to say, can I explain why?
Let's talk about it. That's what we're here for.
Every home has an MLS ticket if it's on the public market, right? And that MLS ticket will show what the seller pays in taxes. I always highlight to my clients what they are paying does not equal what you are going to pay.
100%.
Right?
But what does that mean? Why is that?
Because so that's where the term capping happens, right?
I agree.
So with that being said, right, in 1994, Michigan set a rule. Your taxable value, right, taxable value can only go up by either inflation or 5%, depending on whichever is lower each year.
That's right.
Right? So when that home is sold, that cap comes off, right? So if you're a homeowner and you've owned your home for 20 years, that's a cap, right?
Right.
But once that home sells, that cap comes off and it's fair game at that point,
Yeah.
right? Because that new owner's taxable value will reset to, I'm throwing a lot of terms out, SEV, state.
Equalized value.
Exactly.
Oh, I thought we were going to say that
Oh,
together.
we can do it again. 1, 3, 2, 1. State equalized value. The state equalized value is the city's value number of your home. It's a quick way to think about it, about half of what the home could sell for, just as an easy way to understand it,
Yep.
right? So you could either see the taxable value, right, and the SUV be the same number.
And that's at the point where you're purchasing a home as a new buyer and it becomes uncapped.
Correct.
The
It
SEV.
resets,
Correct.
right?
So those two numbers should be the same at that point.
Should
Absolutely.
be, right? Unless there's some errors, and I'm not saying that there are not errors in the
Right.
world. And that's why a lot of times people will go back to the assessor's office and say, hey, I think there's a problem. That's for another episode though, right? We're not going to get into that today. But today, again, we're going back into the taxable value, right? So the state equalized value is the city's value number for your home. Again, it's about half of what the home can sell for.
Yep.
The taxable value is the number your tax bill is based on. For owners who've owned a home for a while, this number only grows a little bit a year. So your SEV might be up here, but your taxable value could be here. Once that home sells, and if you're watching this on YouTube, you'll get a great visualization. It will balance out and you start at an equilibrium at that point, right? And then as you own that home, your SEV is going to go up and your taxable value is going to increase a little bit, but like nothing as far as your SEV.
Right. It shouldn't be too dramatic.
No, and if it is, that's where you'll notice, and that's where I would suggest having a conversation with the assessor's office and seeing if something happened.
100%.
Right.
Yeah.
So that's where, back in 1994, Michigan did set a rule. Your taxable value can only go up by inflation or 5%, whatever is lower each year. So again, back to, I know we're explaining this, but it's a lot to digest.
Absolutely. And so I think that when it comes down to it, one of the reasons why this amendment was implemented, it also helps long-time homeowners who are in their home not be outpriced by the market trends as they rise. And so
Correct.
that's a good benefit there, right? Because over time, markets they're expected to appreciate, and homes are expected to appreciate in value. And if you're starting at one entry level or one baseline and you notice that things are changing around you drastically and all of a sudden you get a tax bill and it's like, whoa, mind-blowing, right? That's the difference between, hey, maybe I can't afford this anymore, or hey, we need to find out a better solution or something. So
Correct.
I think it's a great way to keep things balanced.
100%. And I think for me, like the first thing that I think about, especially with, as far as mortgage payments, right? It's a pretty much, I'm not saying it's a fixed payment because obviously insurance and taxes do increase, right?
Mhm.
So you can expect your payment to go up a little bit.
As
Not
you
as much as renting though.
Right.
Oh my God, I've seen those increases and I'm like, wow.
And so let me jump in, right? I saw a friend's social media post the other day, and the post mentioned that soon in Michigan, it was their belief that we will be experiencing rental rates similar to New York.
Oh my gosh.
This is someone's opinion. It's not fact.
Right.
But just imagine that.
That would be insane. Oh my God, do you know the rental rate for a small one bedroom
bedroom.
studio? Actually, a studio.
Yeah.
Woo!
It's crazy, right?
That is insane.
Yeah. I don't think we're gonna reach that point, though. Exactly.
We might
But
we might get close,
Who knows?
right? But as far as again for Proposal A, I think it really benefits a lot of our seniors,
Yes.
right, who live in these homes, right? Because a lot of them are on fixed incomes,
Yep.
or they're getting fixed, steady set of cash flow coming in from a certain area, whether that's 401k, pension, whatever.
Correct.
Their income really is not increasing a lot. So for them, they really get, in a way, protected because they make sure that, as far as, again, back to the state equalized value and tax value,
Yes.
their taxes only hit a certain point.
And then too, let's mention homestead.
Let's
throw
do
that
it.
in there, because if you occupy this home as your primary residence, then you also get some tax benefits there.
Correct.
A little bit of relief. Versus if it's a secondary home and you're not occupying that space, then that's when you'll see higher rates. Let's throw in there as well that it also helps the schools,
Yep.
right? And so that's, again, back to the basis and the premise of Proposal A. It's what it was designed to do as well, right? And the children are our future.
They are our future, 100%.
So teach them well, but also we want to make sure that they have a thriving environment, that they can, come home and be at peace, and also go to school and get what they need as well.
Correct, and that's why, I'm not saying it's like a blanket statement, but you'll notice that the taxes are higher where schools perform higher as far
Absolutely.
as testing,
Yeah.
academics, right? If you're getting it, for an example, like Birmingham, you're paying a lot in taxes.
Yes.
But you're also in a really great school district as well.
And we know that, school districts and their rankings has a effect on home values.
Correct.
Right? Many people move in certain neighborhoods, especially if they have families or they're looking to start families, because of schools.
Right.
Right? Everybody wants, their child to have a good education. I think you should or would want to.
I would
but
hope so.
I know for me it's important. So
Definitely.
Yeah.
And that's why even like off of the whole tax conversation, I would say locations are number one.
absolutely.
Right?
Yeah.
You can change the house, but you can't change where it sits on. Right?
Bingo.
But I kind of want to take a step back into homestead just for a quick
talk about
second.
it.
Just a quick second, right? So Michigan does, and I know a couple other states participate in this as well, but Michigan really does something really beautifully for the residents of Michigan. They give something called a principal residence exemption, a
Yes.
PRE, homestead basically. That's saying to a resident of a home, if this is your primary residence, you're spending 51% or more time in that residence throughout a calendar year,
Yes.
you get to take that property and make it a principal residence exemption. Basically,
Correct.
you're taking 30 to 40% off of what your tax bill could be.
And since we're on the residential exemption, let's also talk about how it comes into play when making an offer as a buyer. Because looking at the MLS ticket, it will indicate whether or not that home already has that tax exemption applied to it. And if not, if that home is maybe an investment property, you can expect for changes in your taxes as well.
Correct. I think something to even kind of consider as well, though, is even something that I will tell my buyers is, hey, I want to let you know this is not someone's primary residence.
Correct.
When you buy this property, you also are paying those prepaid taxes on that property.
That's
Those
right.
are prepaid taxes, not homesteaded, so you are not getting as much of a discount.
As you will.
But as soon as you do buy that property, right after closing, you are going to that assessor's office, right then and there.
I'll take you there myself.
We'll Uber you there. 5 stars, please. And you are filing that principal residence exemption. That will hit that
Correct.
following tax year,
Yep.
right? But it's a conversation because I think a lot of people don't understand that. They think as soon as you buy the home, you're exempt right then and there.
Oh no, and they tell it. Well, we have the privilege to work with some very good closers, and they'll notify you right then and there as a home buyer. Because the thing is, if you do not go down and file that exemption and the proper paperwork and documents, then hey, there are also penalties.
Yeah, you'll get fined.
Yeah.
I do want to give a shout out to our title company, First
Let's
Centennial
do it.
Title. But more importantly, I do want to give a shout out to one Jenny, but also Barb.
Absolutely.
Barb is a closer who I use. I'm not sure if you use her
Yes.
as well.
I love Barb.
Barb does a fabulous. I call them the dream team.
I'm telling
The
you.
dynamic duo.
And when you see Jenny at work, she's just amazing. So kudos, shout out to First Centennial Title Company, and I really mean this from the bottom of my heart because they are some hardworking ladies.
Yeah. I think we're hardworking, but they take it to the next
Yes.
level. I mean, you see them come in early, they stay late,
Yes.
just to make sure our files are perfection.
And so the value that you get out of there, that we get out of having them as our service providers, as our vendors, is unmatched.
You can't
It's
beat
unmatched.
it. You cannot
Yeah.
beat it. You cannot beat it. But yeah, so shout out First Centennial, and more specifically, we want to shout out Jenny and Barb, because your work really makes a huge difference with making us look like rock stars as well.
Yeah, and it allows our clients to close with confidence.
Say that again.
Our clients peace of mind is the end goal, I believe, for any homeowner or any real estate journey. And to be able to close with that confidence, that's the ultimate goal. And then too, our success is directly tied to your success. So we want to make sure that we're doing everything in alignment to make sure that you are successful.
100%.
Yeah.
And I think that's why you and I get along very well.
Mm-hmm.
I'm not saying that not every real estate, I think 99% of real estate agents want their clients to close with confidence, but I think that's something that is also a huge value that we pitch to our clients.
Oh,
And
absolutely.
that's the value with working with us. So back to
Yeah.
closing with confidence, right?
Indeed. Let's close with confidence.
Close with confidence. But let's kind of uncover how taxes work as far as how are they calculated, right? When I first got into the business, I'll be totally transparent. I just thought you got a tax bill, and I didn't know where. I thought the state was just like, here you go, here's a random number. I
Really
did not know how taxes worked.
So, what do you believe now? What understanding have you come?
I know it's math. There's math involved with it. So I kind of want to go through the math really fast. And I will be very honest. I did not thrive in math class in school. So I'm going to take this slowly but surely.
You know what? Maybe that's something that we have in common because math was not my number one strength.
I want to give you guys a quick example. So let's say you have a house, right? Taxable value, $100,000. That's where you're also going to have to find the millage rate.
Yes.
For that specific area that you're buying in. And every area is going to be different.
Correct.
Right? I mean, if you're in Birmingham, expect to pay premium. If you're in a different area, it might be a little bit lower. And that's where also the conversation with your agent comes in of, if we move one street over, can I pay a little bit less in taxes? Right?
Very important.
And that's why I think it's important.
Conversation.
Your agent should know that as well.
Yep.
Right? So back to the example of a $100,000 home. Let's say, for example, the area you're buying in is 40 mils. So what you would do is do $100,000 times 40 mils. Millage is a percentage. So you do $100,000 times 40% basically.
Mm-hmm.
That gets you $4,000 in taxes. That's a very basic concept. I'm not saying it's going to apply as easy as I just said it. But I just want to give you an example. Again, it comes from the schools, the city, the counties, and then also there's special fees attached to different locations.
And let's talk about some of those special fees, right?
Yeah, what do those look like?
So, in general, overall, when we're talking about taxes, we're also, let's think about city services,
Mm-hmm.
right? So, you're riding down your street at night. who's keeping those street lights on,
Right.
things like that. In addition to those first responders and just some of the local, what's the word I'm looking for? Well, I just went blank, but just some of the local things that are available to you as a homeowner. The difference between, and I'm gonna back up just a little bit, the difference between cities or certain areas sometimes is just what they can provide.
100%, even as simple as sidewalks.
As simple as sidewalks, you know, roads, things like that. And that all ties into those taxes.
Correct. So that's why even if you are paying a little bit higher,
Mm-hmm.
does it also get you a little bit more?
Correct. Yeah.
Right? So that's where the different parts of that bill come from. And the great part is it will be broken down as far as what percentages are going to each category in that tax bill.
Yes.
Right. So again, buy the home, that home uncaps, and then your taxable value resets. So let's say an example is for a seller, they're paying $2,800. I'll take a $2,800 tax bill any day. Your new bill when you buy that home could easily be $4,200.
Absolutely.
Right. So you're looking at almost about double at that point.
It depends too on when that seller has purchased that property. There are cases that we see, and again, this is why you consult with a realtor. You know, that individual realtor should know, hey, this house was purchased back, you know, a year ago or two, whatever the case may be.
Mm-hmm.
So you may see similar prices
Mm-hmm.
depending on what the market has done. But if that house was purchased 30 years ago, 40 years ago, yeah, there's going to be a major difference.
100%. I want to give the viewers a resource if you're in Michigan that I think will be a great resource as far as, I'm not expecting everyone to be a mathaholic and want to do the math every single time.
Yeah.
But for just quick, easy math as far as what an estimated tax bill is going to look like, if you go to michigan.gov/tax estimator,
Yes.
that page have you fill out some quick information about the property that you're looking at, where it's located at, what school district. If you fill out that form, it'll give you an example of or an estimate of what
Yeah.
if you're doing it as a homestead property, so your primary residence, or if it's not homesteaded, so not your primary residence, so you're spending 50% or less time in that residence.
Correct.
What those breakdowns do, because sometimes even investors, I mean, that's, like I said, taxes can be something
Yeah.
that will either make or break it, so investors even want to know. Everybody
Oh
should
yeah,
know.
and that's one of their favorite go-to resources.
Mm-hmm.
And I know for me, working with my lending partners, that's the same tool that they use.
It's a great tool.
Yes.
I think it's a fabulous tool because, again,
Yeah.
I'm not a mathaholic
That's
over
it.
here.
Nope.
So it makes my life simple, but before definitely closing on that home, you definitely want to be very confident
That's
with
right.
where you're going to end up at.
And if you're interested in the home buying journey, when you're ready to make an offer on a property, that I know that's something that I use in my decision making when I'm helping buyers write offers.
Right.
Just so again, they're made aware of what's to happen or to come in the future.
100%. Quickly, I do want to talk about what happens if you think the city's value is too high. What could you do?
What could you do, Dylan? Tell us.
You could appeal it in March
Mm-hmm.
at the Board of Review, right? So a lot of people think you can appeal the tax rate. Unfortunately, that is one thing you cannot do. Most people feel like they can appeal when they miss the deadline. You can't do
No.
that either. Or bringing proof like recent sales,
Mm-hmm.
right? But sometimes, if you think your bill's too high or something's just a little off, definitely talk to an assessor or
Yes.
hire a pro. Somebody who is an expert on property taxes and knows what they're doing,
Yep.
because they definitely can help you out. Even if there's not a problem and you think there's a problem, definitely talk to somebody.
Oh, sure. Absolutely. Because I think that, too, and just throwing it out for some of the current homeowners, a lot of that unoccupied space that's not livable in your home, you can go down to your tax assessor and say, hey, this square footage of the home is not livable, is not accessible, or whatever the case may be. And they can review that for you. And in some cases, I've seen homeowners actually get their taxes, reduced because of it.
Right.
So.
Right, that's just because you got the education behind it.
All because you have the education.
And that's our goal as far as this podcast, is to give you guys the foundation knowledge you guys need to know, and then go take that along with your journeys.
That's right. So, you guys, you're not just falling in love with the house. You're gonna make sure that you're falling in love with the financial plan, what it can do for you, right, in the future. So
100%.
We're gonna wrap this up.
That's all I really have for today. I mean, some quick highlights, right? Obviously, if you are purchasing a home as your primary residence, make sure you get the principal residence exemption. Make it homesteaded, right? Obviously, just know that what the seller is paying is not exactly what you're going to be paying. Depending on how long they lived in that home, your tax bill could even double, triple, right? You never know, and that's why it's always a great idea to know that before. You definitely should.
Absolutely. And lastly, if you need more information, visit the website that Dylan mentioned, the Michigan.gov/tax estimator.
100%. It's a great resource. It's something that I use as a professional to give a good idea of where I think your taxes are going to. Again, it's an estimate.
That's it.
But it's pretty close.
And I think that's fair enough.
I think that's all we have for today. If you guys have any questions about property taxes, reach out to us. Love to start the conversation, get you guys more knowledge, get into the nitty gritty, give you guys the details, especially for your guys' situation.
Yes.
If we don't know the answer, we'll find you that answer.
That way you always have the right answer.
Bingo. Bingo. But we want to hear from you guys. At the end of the day, we do this podcast for you. Shalonda and I have great conversations off camera, but we bring the camera in because we want to give as much value to you guys so that you guys are as confident as can be when you're buying your home. So if you have any questions, want to have a conversation, Shalonda, how do they get in contact with you?
Well, the easiest way, and I would say the best way to get in contact with me is directly. Give me a call, shout out 586-339-8321 is the number. Call or text. I think that's the most simplest way to get in contact with me. And I love to hear from you. Dylan, what about you? Tell them.
Same. I mean, the best way to do it is either, I'd love a call, but if you like to text, I'm a great texter as well. My phone number, my personal cell phone number to get the best reach of me is 248-891-9860. And I look forward to having that conversation with you.
And so, thank you all for joining us in this conversation today. Don't forget to like, share, follow, and also to tune in every Wednesday for a new episode. We're bringing you all the value and gems that you should know in the real estate world.
And on that note, we will see you next week.
Bye.